Habakkuk chapter 3, verse 19. God, the Lord, is my strength. He makes my feet like the deer's. He makes me tread on my high places. To the choir master, with stringed instruments. Deuteronomy chapter 20, verse 4. For the Lord your God is he who goes with you to fight for you against your enemies, to give you the victory. Isaiah chapter 40, verse 29. He gives power to the faint, and to him who has no might he increases strength. Isaiah chapter 12, verse 2. Behold, God is my salvation. I will trust and will not be afraid. For the Lord God is my strength and my song, and he has become my salvation. James chapter 1.
Yo, good morning, everybody. Hopefully you guys can hear me okay. Says everything's good. Let me know in the chat real quick. Good morning, guys. But let me know in the chat if you could hear me, if you could see everything okay. Little late start, because there's some things that are not working out, or looks like they're not. Everything's good? Okay. Perfect. Well, hopefully you guys have had a good start to the year, right? Hopefully you didn't hurt yourself yesterday, or not yesterday, but last week. Good morning, Harley. Good morning, George, Fritz, Mike, Tony. Appreciate y'all hopping on. But yeah, so it's been a pretty interesting start to the year, to say the least. Lots of people have had some pain to start the year because they're pushing a little bit too hard. It's January, right? It's the start of the new year. NFP, FOMC, right? People are getting prepared for what it is that they're going to try to do this year. So, big money's not necessarily making too many decisions right from the start of the year. But does that mean there's no opportunities? Obviously, it's not what it means, right? We've called out at least 3 opportunities per live call, including the live calls that I've done, or live call that I've done on YouTube, and then every day in my private group. So there is opportunity. The question is, are you disciplined enough to accept when you're wrong and not push too hard? Or are you undisciplined, over trading, over leveraging, trying to get the market to give you everything that you need for the year in 1 month, right? Or let alone 1 day. So we're in a time that I talked about back in November. I said November to at least the last week of January can many times be a problem, okay? Does that mean that, again, there's no opportunities? No, that's not what it means. But you got to go into this time of year very disciplined. You can't be like everybody else, over trading and over leveraging, trying to push too hard, thinking, oh, it's the start of the year, let me start off with a bang. You can start off with a bang by being disciplined. You can have a bang out year as long as you're disciplined. You only need 1 to 2 trades a day, if that, right? You don't need to trade every single day. You should look at the chart every day, right? Try to determine what it is that you're trying to see price do. But that doesn't mean that every time you sit at the chart, you take a trade, right? Those of you in my private group, those of you that have been with me here on YouTube for a while, you see that, I showcase that. I don't overtrade and over leverage. The most trades I'll take in a day, if it's a good condition, or if I may have made, a slight mistake, is 3 trades. You'll never see me go over that. Does that mean that no traders could go over that? It kind of just depends on It kind of depends on how you're operating, and if you have more than 2 to 3 trades, it's encouraged to cut your risk to allocate funds towards that third trade if you do decide to take a third trade. So you take like your, hypothetical 1%, right? Let's just use that as a easy example. And you split it into threes for your lot size, right? You'd calculate that, and that's how you can stretch it. If you want to have four trades, give yourself a little bit more breathing room, then your risk in that initial entry should be dropped even further, right? And if you start thinking about pyramiding and whatnot, obviously that's a whole nother world as well. But just a baseline understanding for risk and how much you should be engaging. 1 to 2 trades, that's what I recommend. That would have saved a lot of people last week. Some people that I tell this to, or have told this to for a while, sometimes choose not to listen. And then they hit me up saying, oh, I hurt myself again, and this, that, and the other thing, right? It's needless for us to do these types of things to ourselves. It makes us take longer, and there's better ways, more professional ways to operate as a trader, okay? And if you need more than 1 to 2 trades to get in front of a move that works, unless that one trade is like, a toss-out entry just to get a feel for things, you should never go over that, right? 1 to 2, maybe 3. If you're pushing it to 4, again, you got to cut your lot size initially, because you can't take 1%, then 1%, then 1%. That's 3% in a day, right? If you take 1%, cut your risk by half on the next one, the max loss that you can have in one day, and this is why this is important, right? The max loss that you can have in one day, if you have the 2 trade rules and you cut your risk in half on that second one, if you take a loss, you can only lose 1.5% in a day on any given day. No matter how horrible the chart looks, no matter, what may take place in the market. If you limit yourself to this, this is where the power is in this, right? In this perspective, it's preservation of capital, and it's over time accepting the fact that you don't need to be doing something so aggressively. Like it just being too aggressive can be a problem unless you gain the experience to understand when that type of scenario should unfold or when you should act that way, right? Maybe push a little harder. But again, for new traders, for traders trying to be profitable, right? Like reach for profitability, and just at least try to taste it in the fastest way possible. 1 to 2 trades a day. Obviously, listen to all the stuff that we talk about here and things that ICT has taught. And over time, you'll be fine. You know what I mean? But if you overtrade and overleverage, no matter what you learn, no matter who you learn from, no matter what you apply, long term, you're not going to survive. Because there are days that I take losses. There's days that you take losses, right? So you have to account for that. And we don't know when those times are going to come. It's not like we have a crystal ball that tells us when we're going to win, when we're going to lose. We get a lot of probabilities in our favor, as you guys have seen, right? We're correct more than we're wrong. But being correct more than you're wrong is only beneficial when you know how to manage risk. And why am I starting off with this? Because I've gotten numerous messages from last week of people hurting themselves, trying to wonder or trying to figure out how they stop doing this to themselves. And of course, it most times comes back to a discipline thing. Okay, like you have to force upon yourself the discipline to not take trades. The convincing aspect of things that we're doing to ourselves when we do overtrade and over leverage, we're like, oh, I just have to do more, and I'll be able to maybe get it back. Once you think that way, that you want to get it back today in the same session, or within the next like 20 minutes after you took a loss, you're automatically putting yourself on the back foot. Your emotions are now elevated, and you should be journaling these moments and pull back, right? Pull back on that, right? When you think that, stop, right? Evaluate the session later on and see if I would have pushed one more trade potentially, would I have been profitable? And you have to do this over years. So then you can finally discover like, okay, yeah, I really only needed 1 to 2 trades. And if the 1 to 2 trades didn't work out and I managed risk properly, right, and it just goes the other way, then I was wrong. And there's nothing wrong with that. But being here in this community, you clearly see that we're right more than we're wrong. Okay, so just kind of the way it is with what you guys are learning and how we operate. Okay. So yeah, I wanted to mention that. Let me look at the chat. The goal is to preserve your best decision-making state for highest edge opportunities. Yeah, I agree. I agree with that. Rather than grinding through mediocre setups just because they're there. Yeah, or just because you want to take a trade, right? Or you just feel like you need to get it back. You in no way need to get it back, no matter what your goals are. If you're trading with a mindset thinking, well, on this next trade, it's going to make or break my ability to pay rent, and you're not even fully proven that you're profitable yet, what are we really doing? Right? Like what are we doing? This is a probability environment. It's something that requires a lot of skill, and experience builds over time, not because you watched a video, right? You guys that are here consistently on these calls, those of you that consistently hop on in my private group and are with me pretty much every day, you're gaining that experience. And you guys are seeing from the time you started with me, either here on YouTube or in the private group, which there's a QR code right there. Any of you guys that are interested in seeing details about that, you can use that QR code and go see some details, or go in the link in the description. But those of you that have been with me for this long, at least for some length of time, and have seen what it is that we do and how this all works, at least in this community, you see the possibilities there for you to be profitable. It just takes time. Possibility, right? I can't guarantee profitability because I'm not a financial advisor and I'm not licensed to give that type of advice. But what we do works. I prove it. A lot of students prove it. Of course, it all comes back to ICT. But again, at the end of the day, this stuff takes time to really resonate. So give yourself the grace, right? Most of us started trading with a dream of like, okay, I want to double my income. I want to trade for a living. I want to be free. I want to buy my freedom back, and we come to find out that it takes a little bit longer than we anticipated, and it takes more work, and it takes more sacrifice, and it's a little bit harder than a lot of the marketing portrays, but eventually it gets easier. So those of you that may have struggled, those of you that may have sent me a message in the last couple of days, just know that if you do the right things, if you take those experiences, don't beat yourself up over it. It just shows when you overtrade and over leverage that you're like you're at a point in your development where you don't fully understand what's going on and what's truly required to have an effective performance long term. Overtrading and over leveraging is never a solution. Any of these big traders that you see on social media, they're not overtrading and over leveraging. And if they're taking more trades outside of the parameters I've set for you guys, they probably know what they're doing, right? If they've been trading for a long time, I guarantee you, if they've been trading for 2 to 3 years and they're overtrading and over leveraging, I mean, there's more to the story, because it takes time. And the sooner you can solidify this perspective and experience the fact that you don't need to take more than 1 to 2 trades a day, and you'll be you have still the chance to be profitable. It'll be really eye-opening, right? So let me double check the chat. And yeah, some circumstances just aren't worth pushing like at all, let alone over trading and over leveraging. Like NFP week, come on, right? Like, is it really necessary to over trade and over leverage? Like next week, we have CPI. So again, it's another week that you got to be on your best behavior. Okay, you can't be, trying to have like 2 or 3 years experience and think that all the bills are going to be covered with no savings, no back end financial defense. You got to appreciate the grind, the rise, right? And the path to get to where you're trying to go, because that's where you set the foundation. That's where you make it possible for when you do become consistent for you to be profitable, because you can't just have like no money, 2-3 years experience, no savings, no detailed process, and then just wing it, right? You can't do it. I tried it. Trust me, I tried it and lost all my money when I could have just saved that money for like times like right now. I know what I'm doing. I know what I'm looking for. It's the same stuff every week. I don't fear losing. If I take a loss, I don't really care. I'll come back tomorrow and see what happens, right? Generally, things manifest because what we do just works, right? So what you guys are going to end up doing works, right? What you're doing right now probably works. It may be unorganized, right? You may still have some of these issues that you're trying to build discipline around to get better at. But again, that's just part of the process. So again, I wanted to start off with this because I got a lot of heartbreaking messages again for another NFP. And it's unfortunate because I try to, guide you guys the right way. Some are, students that don't hop on consistently. So, listening to this guy and that guy and this dude did that and whatever. And they're being influenced by this stuff. And it's really unfortunate because ICT also shoves this in our face constantly. If you can't preserve capital, there's no opportunity because your money will eventually drain and you'll fall into the statistic. 90% of traders lose 90% of what they make in 90 days and then they quit, right? It still stretches out, right? You can even expand it to, years in the future. If some of these things like overtrading and over leveraging are not squashed by just forcing discipline and, like following the rules, it becomes impossible. The only way that you can trust the rules is by applying the rules also. So if you have a model and there's rules, but you keep bending them, are you really getting an accurate like depiction of if that model works for you, if that trading plan or those rules work for you, if you're constantly not allowing yourself to be consistent with the process? It's skewed data. Same with trying to apply like 5 different models when you don't even understand one yet for at least 6 months, right? What are you really doing when you're looking at the data that's being provided? It's skewed data. You don't know which one worked, which one didn't work. You don't have like specific separated study time for each of the topics, each of the models. So you just don't know. And of course, in that instance, it feels extremely like discouraging, right? Because you don't know what to fix because there's so many variables, so many things that could be going wrong, right? So you want to make sure that you're individually studying things. You want to make sure that you're at least practicing the discipline to follow the rules. You shouldn't be in a rush. The faster you chase this, the harder you chase it early on, the further away it becomes. The more problems you're going to have to overcome, the more mindset issues, the more mental scar tissue that you're going to have to overcome and work through. So it's best to just do it right the first time so you don't have to go back and do a bunch of patchwork, and you probably, all of us eventually have to do some patchwork at some point because our understanding grows, what we see in the market grows, what we find as important grows, our awareness to what's important grows, the process becomes more solidified and organized. So as a result, your mindset kind of shifts its focus and reality sets in too, right? So any unrealistic expectations get set instead of like short-term goals, they get set as more intermediate and long-term goals because now you're focused on, at that point you should start to be focused on what's truly important, which is understanding the process and mastering yourself and not overtrading and over leveraging, especially on these red folder news events like this: CPI, FOMC, NFP, rate announcements, Fed speeches. Be cautious too these days because there's a lot of chaos happening all across the world, right? There's uncertainty all over the place. So again, it's something that's hanging over the market that's going to potentially create harder to trade environments. Then you stack the news events and it's like, and you stack the lack of discipline, you kind of just see a clear picture of where the problems reside and why things are a little bit harder. And then you stack the lack of experience. I mean, I mean, you paint a very vivid picture of why things don't work out for many people, because all of those things are out of alignment and they're not focused on that stuff. They're just focused on when to get in a trade. And that's the least of your worries. All these other things come before that, right? So again, I wanted to spend some reasonable amount of time on this because, you know, some of these people that I don't know send me messages because I understand that, they're in a place of desperation because of, situations they put themselves in. And, they get manipulated by marketing and stuff. So I try every time I get these messages, which is pretty much all the time after these news events. I try to put a grounding element. So hopefully I'm able to do that for you guys because, it is still heartbreaking when people continue to hit me up, especially ones that have been with me for a while. And it's like, when are we going to stop hurting ourselves? Right? Like, when are we going to just accept that things need to change? When are we going to be sick and tired of feeling that regret? Because if you follow the rules and you lose, first of all, the pain's not going to be as much. It might be annoying, but the pain's not going to be as much because it's 1 to 2 trades that you're taking, right? It's not going to be, it's not like so dramatic. And if you don't break the rules and again, you lose and you follow the rules, at least you followed the rules. So it's a win because that is a positive deposit to your disciplined bank account, right? Your mindset bank account. So in the future, you're building trust in yourself because the more that you break the rules, I've said this a lot lately, but the more that you break the rules, the more that you go outside of things that you need to be focused on and follow, the less trust you're building in yourself. It's taking you backwards. You could be trading for 5 years, 10 years. And if you just keep hurting the trust in yourself, no matter how much concepts no matter how, perfect your understanding is, you're not going to, it'll continue to be a problem. You'll hesitate. You'll be fearful for good reason. Like if someone was lying to you all the time and, you're trying to trust them with something important, you'd be absolutely shaking in your boots to trust these people, right? If they were lying to you nonstop and demanding that you trust them, like we are to ourselves. We're demanding that we trust ourselves without giving our subconscious mind a reason, solid reasons to be trustworthy. And again, that's the hidden cost to breaking the rules, aside from financial, right? It's the hidden cost, and not many people talk about it. The trust factor. I don't think I've ever heard anybody talk about breaking the rules, being undisciplined, is damaging the trust in yourself. I don't think I've heard one YouTuber talk about this, like in this way. Everybody tries to say this and that about psychology, right? And, how to build confidence and whatnot. But it's just a lot of shiny objects that they talk about. Or they push you to an indicator, right? Or some nonsense that, it has nothing to do with what price is really going to do, So again, I just wanted to spend some time on this, and hopefully it's helpful. Hopefully it grounds some of you guys that may have had an issue. Hopefully those of you that are on the call right now, if you guys did go through some stuff, let's talk about it. But, any of you guys that send me messages that, maybe recently have followed me or don't really get the chance to hop on a lot. If you see this video, I hope this is kind of helpful to you, to help ground you. Don't beat yourself up. It's one of those things, you know what I mean? It's one of those things that makes trading hard. So, and the more you follow the rules, the less damage it'll be, okay? And the more trustworthy you'll become to yourself, which is crucial. Because I kind of give you guys the trust framework, how to trust your bias and narrative, not only by coming out doing the process in front of you consistently the same way, but it's also applied and you see the result. And then you see other students who apply it like to the maximum. I mean, you could see that it works. And so it's something that you can trust eventually. But same with like models of entry. You got to practice with them, spend some time with them, build a relationship with whatever model you're trying to to get good at, or models that you're trying to get good at. Spend 6 months to a year on each model you're trying to implement. So that gives you enough time to build a huge backlog. So internally, you'll have the trust. Yeah, this works. I just have to have this, and that scenario unfolding, and it puts me in the best position. And eventually, that compounds just like money, So the trust compounds, and then eventually you'll wake up one day and be like, wow, like I'm not really scared of anything. I'm not hesitant. I trust myself. I know I'm not going to blow my account, so there's nothing to worry about. The most I could lose is 1.5% if I cut my risk, right, after a loss, assuming 1% what people are risking. You can apply this to any amount of risk too. Like if you're risking 0.5%, right, that's like your starting basis, right? If you take a loss at that 0.5%, you drop down to 0.25% until you make it back, right? That initial loss. And you keep your risk cut until you make it back. That makes the equity curve very beautiful. It makes it a very admirable, slow and steady uptrend, right? Whoever just subscribed, I appreciate that. I'm glad you're getting value. But yeah, don't forget to like the video, subscribe to the channel, you guys. It definitely helps me out. Before you guys forget, I know some of us forget sometimes, but yeah, it definitely helps the channel get in front of people that may need to hear this type of conversation, So, it's funny because some students that hit me up on Instagram, because this is where the messages came in on Instagram. Some of them hit me up on Instagram and they don't even follow me on YouTube. And I'm like, what is going on? Like you hit me up on Instagram. Come on, let me help you more. Come and join us live. So yeah, if you guys can do that, don't forget to like the video and subscribe if you haven't already. Definitely helps the channel out, and you don't miss these types of conversations because not enough people talk about this stuff because it doesn't sell stuff, right? But that's unfortunate, right? Because this is what people need to hear. It's what I needed to hear. That's for sure. So yeah, with that being said, again, we have CPI. It is still January. We're going into the second and then third portion or weeks within this month. So generally, Power 3 is happening on the monthly chart. Well, not generally, all the time. So if you think of the weekly, the weeks, they have their own characteristics, just like how the sessions in a day have characteristics within the Power 3. Okay, so the first week is generally accumulation manipulation. Most of the time it has NFP, FOMC and stuff. So, that a lot of times is used to initiate that. Sometimes, the start of the month will actually start the move. But most of the time it's treated as accumulation and manipulation for the monthly range. And then the 2 middle weeks are the best weeks to trade, preferably on a Tuesday, Wednesday, or a Thursday within those 2 weeks. And then we have the ending month, or the ending portion of the week, or the ending portion of the month being the last week. And that generally caps the monthly candle. So if it was bullish that last week, if we hit a PD array or target a significant liquidity pool, after the month has been one-sided already, you can really, really bank on the fact that we're going to see some type of a reversal, especially if there was an imbalance or something that was left, and we hit an opposing PD array. So this is how I map out my months, right? And this is how I walk forward and have been talking to you guys, or I've been teaching you guys about for, so long at this point, for those of you in my private group, but for you guys on YouTube, this has been heavily talked about over the last year, right? So hopefully you've been applying it. But again, we got Sunday, Monday, right? If we think about the weekly range, after we think about that monthly perspective, we got Sunday, Monday. Generally, it's accumulation, manipulation. We don't have any real red folders. This right here may send pretty solid movement. This is an FOMC event, right? These are FOMC conversations. So they do have an impact. They're yellow folders. I don't know why they're yellow folders. I think it's because sometimes it doesn't really have too much of an impact. But I've seen it's pretty reliable that when these people talk, or when a bond conversation happens where they're selling bonds for people to buy, things happen around those events. Pretty solid volatility. So keep that in mind. It is a yellow folder though, so again, there's no red folder. So generally, we got to be really, really cautious because it sometimes won't do anything, right? Versus like red folders, which almost all the time make a big move, or at least a strong volatile move. So Sunday, Monday, accumulation, manipulation. Tuesday, Wednesday sets the high or the low of the week. Generally, that's what we go into every week aiming for, to see if that type of characteristic can unfold. Preferably, the setup or the high or the low is forming above the open price, right? Well, pretty much it always does that, right? But around that vicinity, right, wherever that's at, when we're looking to take executions, we want to get our positioning around the open price, which is the open for the week. And then, we see what happens once it sets the high or the low of the week. Preferably, we're also aiming for a PD array to be tapped into when that type of thing is taking place. Because then you could frame out that PD array above the open price if we're bearish, or below the open price if we're bullish. And then you could start to target and use that as the root of the weekly range. And then from that point up to a reasonable target, like something that's on the liquidity mapping list, which I have in the free Discord and I have it in the private group as well. Let me actually pull that up real quick for those that may not be familiar. Okay. This is what I mean by liquidity mapping. Very simplistic perspective, right? I kind of describe what we're doing here in a paragraph, just as a reminder every week in both the private group and the free group, the free Discord, which links are in the description. For the private group, the QR code you guys see right next to my webcam video, you can hit that or go to the link in the description. But essentially, the liquidity mapping is obviously having to do with liquidity, right? What liquidity is the real question. And it's the previous day's highs and lows, previous week's highs and lows, month's highs and lows, higher time frame PD arrays. Those are generally things that you focus on the higher time frame, like framework, and obviously for narrative and targeting, right? If you can position yourself within the narrative that's being pushed. And then the lower time frame levels that we're looking for, we're keeping in mind these levels, right? These higher time frame liquidity mapping levels. But when we go to the lower time frame, there's a couple of different little things as well, like new week opening gaps, new day opening gaps, session highs and lows, hourly highs and lows, 4-hour highs and lows. I guess you can associate that to the higher time frame. But all that stuff is still relevant. But specifically, the lower time frames will refer to intraday volatility, right? And you got to make sure you're focused on where those are at. Like previous AM session highs and lows, right? That stuff becomes important as well. So you always want to map that. But my favorite is London's high, London's low. And then, of course, if we can take that, hitting a higher time frame PD array, and then look to target one of these levels, that's generally like a skeleton framework that I try to go into every session thinking about. And for the most part, you guys see what manifests from this, tactic. Obviously, there's adjustments that take place here and there, different targets sometimes. Sometimes it'll take a previous day's low and then target a previous week's high, right? It could be like for a larger move. And that's a really, really common thing as well, right? And then you got the last 3 days for like more short-term weekly range trading, like TGIF, for example. Many times if TGIF happens, it's going to target the last 3 days highs if we're bullish, or the last 3 days lows if we're bearish. So that's another thing. I don't know why I don't have that here. I got to add that. Let me see. Yeah, I'll go add that a little bit later. It's November. What the hell? Wait a minute. Let's get us back to where we're where we're actually at. So yeah. Do you guys have any questions about this liquidity mapping idea or anything that I've described here? I tried to make that like liquidity idea very simplistic, right? Because sometimes these levels, right, one or two of these levels can end up being the counterparty liquidity. Like I said, like a previous day's low being targeted, pushing into New York session to then target previous week's high, or maybe the last 3 days highs, right? So that's like a scenario. There's a bunch of different a bunch of different ways of grouping this type of stuff with counterparty liquidity, a PD array, and then the opposing liquidity or PD array that it's reaching for, which gives you like your little range where counterparties were engaged, like below a low, to where offloading of those positions will take place or profit taking will take place, for example, at a high, some one of these highs. So they sweep one level, tap into some PD array that's going to initiate the move, especially if you're looking at higher time frame delivery. And then it rockets its way up to a particular high, right? If it takes a low, and then it targets a high. The low is where the counterparty liquidity is at, preferably merged with a liquidity pool or a PD array. And then that counterparty liquidity gets dragged by their hair up to something like this or some other PD array, maybe equal highs or something like that. And the same thing is true for going lower. That's like order pairing in a nutshell, in the most simplistic way I could make it. So yeah, hopefully, let me see the chat. All right, Fritz said that makes sense. Okay, good. So yeah, again, with that being said, again, as always, we think about power three. So we'll see what happens on Tuesday and Wednesday going into Thursday. Maybe Tuesday and Wednesday is very aggressive. And then by Thursday, we hit a significant PD array. And then this news event is used to trigger in, the counter move to turn around and give us that retracement, late week retracement. Or maybe it doesn't hit the PD array here, but it gets really close. And then it goes into Friday, we tap into it, and then Friday gives us a TGIF. This is some scenarios you could think of. So Thursday and Friday in the weekly range are generally used for the opposing end of the weekly range. So you always want to keep that in mind. So again, just to review, Sunday, Monday, consolidation manipulation. Tuesday, Wednesday, expansion generally. Preferably we're setting the higher the low of the day or higher the low of the week on one of these days. And then going into Thursday and Friday, it'll cap the weekly range depending on which one of these days, if we were one-sided, hits an opposing PD array. Like if we're bullish, it hits a high, a significant high, like something from that higher time frame liquidity mapping list, or it hits a PD array. Right, a high is a PD array, lows are PD arrays. You can see that labeled in the PD array matrix ICT teaches. I separate them though sometimes because, I don't know, it kind of just helps with organizing things and isolating certain elements. But yeah, hopefully that makes sense, doesn't confuse you guys. But yeah, so that's going to be what we're going to keep in mind. And then, most of our trading is going to be either after CPI. We'll see what happens tomorrow. And then on Wednesday, we'll see what happens with PPI. Lots of early news this week, so that's pretty interesting. So yeah, we'll see what happens. So yeah, with that being said, let's move on to our first asset. Okay, so we got the bonds, right? We have been trying to watch and see if this is going to hold up in here. See if it was going to respect this breaker. Up to this point, it has. Up to this point, it's also respected the 50% of this. Do we close above? So it does look like we are still hanging out below the 50% of that. So the only way that I'll turn this asset bullish is if we were to get beyond this fair value gap, this breaker, and take this high and get above this. So simply if price gets up into this level here, that'll be enough for me to assume that, price may look to continue going higher and it may fail this, especially if all three of them start to agree. But if this continues, as long as these levels stay respected, there's still a chance for it to want to target the lows down here. I'm going to be on the side, more on the side of watching for this to hold and see if it can't drag it lower, right? We're also inside this monthly bullish order block, so that's another thing that kind of supports this going higher. But in order for me to make that adjustment, since it was bearish already for a while, and it's already taken this low, it's taken out multiple PD arrays, I'm just going to have to see how that's going to behave. This is a mess. It's nasty. So if you guys have had some issues, a lot of those issues most likely are rooted in the fact that the bonds and yields aren't doing anything. Plus the fact that it's the start of the year, plus the fact that some of our money is still on the sideline because of that, at least for the most part. Obviously, there's participation happening, but there's not really many big things happening. CPI may change that, right? That's going to be something very important. We had FOMC last week, or NFP last week, so we'll see how CPI offers price. Okay. Good morning, Fancy. Appreciate you hopping on, brother. We swept the lows. Fritz says previous week's high untouched. Yeah. And again, you guys have been watching me leave this on the chart. It's purposely being left there because I'm not entirely sure if it's going to leave that. That's very, very clean up there. They don't like to leave very clean things like that. It looks like it's been intentionally held up. This run above this high makes it a little bit harder for it to get up there. You guys can see how it's kind of struggled. So, and it's been just kind of a nasty mess. There's been a lot of things happening with interest rates. So again, this asset heavily influences what's going to take place on the indices and the foreign currencies. So that's why we spend time here. Because once we get a feel for what this is doing, we have a pretty solid baseline understanding of what should or shouldn't be able to be trusted going into those other assets. Same with the yields, right? So again, if we go back to this weekly chart, we do got trendline liquidity down here. And we are kind of, if you take this high and that low, get that extreme range from up here down to there, we could still see that we're still reasonably at the 50% level. So what happens there when we're at equilibrium, right? It generally can be a harder to trade environment. So because we're inside that equilibrium, again, we need to see some real effort to push outside of, where we're at currently. Like if it gets up above here, right? That'll make me confident or more confident that we'll target the highs up here, not equal highs, but the highs, right? These are all weekly highs, okay? So those all become targets once price was to get up above this. And if it was to get up there, right, it's inverting this, we're now leaving a change in state of delivery here. Especially if it displaces up, that'd be very convincing that shorts are not going to work anymore. It's going to turn off. But again, as long as it stays inside this, we have to respect the fact that this may still hold. Price has been breaking down. Okay. So we're going to need some real evidence for it to want to prove itself to go higher. If it is going to go higher, I'm going to trust for the most part still up to this point that we may still be interested in coming down to here, but it's not a very clean asset right now. So that's just kind of the way it is. But if gun to my head, like ICT says, right, I would like to see if it can hold this, given we've already broken down, right? We came off the highs up here. It's broken many PD arrays. I would just assume that it's probably going to try to target down here. And if it does drop down below this, it's going to target this. And then if it can blow past that, our next objective is here, right? The whole trend line liquidity. And, we'll see, if that was to manifest, what happens, right? So yeah, this is going to be an asset that we keep tabs on, but we're not going to have too much demand on because, again, it is sideways. It's not really doing anything. There's a likelihood if it was to break out to come up here. Otherwise, this should hold and then push price lower. And we'll see what kind of impact that has on the indices, given the fact that it's consolidated at the moment. it's had a pretty nasty impact, right? You guys could see it's been pretty jerky lately, aside from all the things happening in the world, right? So yeah, those are my thoughts on this asset. Don't really feel the need to go any further with the time frames. We have a pretty clear visual of what's taking place. So yeah, with that being said, let's move on to this. So again, the yields impact what the DXY is going to do generally has a heavy influence. So with this being up above the high here, we have a monthly bullish order block. We have a swing low here. We have this inversion fair value gap. As long as we were to stay above this low here, we'll still see it go higher. This closing so deeply in this range inside this candle, we may look to try to target that low. We're below the 50% of that. So we'll have to just wait and see kind of what that does. And again, if it displaces through that and then shows little to no respect to this, then we'll continue to see this fall off the map. But again, we have the fair value gap. We have the swing low. And we had these down candles, which have been violated, right? And then again, we have this monthly bullish order block we have to watch. So again, that's multiple PAD arrays, right? We got the wick in here, right? We got a couple wicks in there. So we definitely have to keep tabs on that. That's another PAD array. So again, just all the more reason for if price was to displace through this and on a closing basis, like give this type of move or like this type of move, that'll be really assuring that it's going to go lower. Okay, but for now, we got to keep our eyes on this low. Preferably, if price is going to go higher, we don't want to see that taken. Depending on how that's taken, if it does get down there, that's going to also be very influential because it could just reasonably be trying to tap back into this monthly bullish order block and then send it higher again. Especially if we break down below this fair value gap. Dude, like if it breaks down to there, we're definitely going to go lower, right? So that's like the for sure indication that, we'll look for more sell side. But for now, we got to keep our eyes on this. We got to keep our eyes on what the bonds are going to do. And we'll see how it reacts if it does reach down there. It could reach down there. There's a pretty decent possibility because of how large this candle was that traded back into this range. The wick in here is going to be very important too. If price has done this, opens up on the next candle, and then wicks into the 50% or can't even get into there before it starts to ramp up, then obviously we're not going to be too interested in seeing it come down to the downside. Again, gun to my head, just like how it was over here where I said that this may go up, continue to hold this, and then go lower potentially. And that's disrespected when we get up here. It's going to be the same thing here, right? We're looking for this to do a very similar element. You could see the reverse correlation between these assets. And then given the description of what they impact, you can start to reasonably see why this is important to spend time on, right? And monitor on a week-to-week basis. Okay, so we'll see if this can hold. I wouldn't be surprised though if it wicks below that, then goes. And all of that turns off if this displaces super aggressively through this fair value gap low, through this swing low, and through this monthly bullish order block overall candle, and then violates this. This would be an inversion fair value gap that I would look to see a possible strong reaction to going to the downside if it was to trade through it. So again, these are assets that we're going to put to the side a little bit, keep tabs on it, but it's put to the side. It's not going to influence whether we take a specific trade on the indices or, or DXY, right? We don't trade DXY, but yeah, you get the point, right? So yeah, with that being said, I guess that's pretty much all I have for that asset. It really helps when we have this asset or we start with this one and then we move on to the other one because they're reverse correlated, right? Just like how Euro USD and the dollar are, right? It's pretty much the same type of correlation, pretty much lockstep a lot of times. So yeah, that will be it for those assets. So if we move over to the DXY, So yeah, we had a very aggressive repricing higher, right? So again, the dollar's aggressive repricing, if this is going to be trustworthy longer term, we're going to require that this holds this level, right? So you kind of see how the analysis that I've put onto this asset and the other asset, but specifically this one, the yields, you could see how that potential bullish interest may in fact continue to unfold, because the yields don't necessarily drop if the dollar's looking to go higher. There's not necessarily a huge crack in correlation like that, because currencies of a country chase the yields of the interest rates of that country. So that under the hood dynamic of how currencies operate is why this is such an important asset, right? It's why it's so important to look at these things, right? Because people wonder all the time, like, why is it important? I tell everybody the relationship, but they're like, okay, well, what is the, like what is the real reason? And you don't necessarily have to know that currencies chase yields. You don't have to know all the intricate details to understand what's going on and use this stuff. You just have to simply understand the relationship and what it impacts, and whether it's your asset being impacted or not. Because then that helps you get to a decision, because that's the key element, right? Decision making, not who knows economics the most, right? It's kind of irrelevant, in all honesty. Well, at least in my opinion, I guess, right? So yeah, if we look at let me actually go to the chat. I think I saw a question. Can we tag previous monthly low and still be bullish in the narrative? Yeah, let me go for the which one was it? The yields? Let me see which one's closer. Are you talking about this right here? Yeah, the bonds. Well, preferably, I mean, anything's possible, right? It doing that, depending on how it was to do that, that would be something very significant. Because if it was to displace through this, remember, we're inside of a monthly order block. It should not, in this instance, because of where it's at the 50% of that monthly bullish order block we're watching. So you guys know how we like to see order blocks and other PD arrays respond. If it's bullish, we want to stay in the upper quadrant above 50%. We don't want to break through that, because in things like order blocks, they are basically balanced price ranges. So we don't want to see a balanced price range 50% level get taken out if we're going to continue to trust it going in the intended direction. So if it was to break down into that, it could wick through it if it wanted to with heavy manipulation. Ideally, that's not what we want to see. And depending on how that low was hit would determine whether price is going to continue to just keep going and disrespect that initial PD array that it's trading this inside of. Does that make sense, Fritz? It could, but ideally we don't want to see it happen, especially with where it's at in the circumstance. Everything has nuance, right? Everything has nuance. So yeah, hopefully that answered your question. But yeah, we'll go to the DXY now. So if we take this to the monthly chart real quick, start here. Take off some of the annotations. So again, before I take them off, we are inside that quarterly bullish fair value gap. I've talked about this literally since the start of last year. So I've been using this same PD array on this asset for literally a year straight. That tells you that sometimes you're going to have to use higher time frame PD arrays for a while. There's no reason not to. And it's something that most people aren't doing. People think that something gets traded into and it's done. It's not done. Okay. If it returns into it, those levels are going to be sensitive. Same goes for every other PD array. All right. So we'll see if this continues. We are inside of this bullish daily or bullish monthly order block. 50% level is here. You notice how inside this 50% level, price, for whatever reason, must be random, is holding on to that level, right? It must be random, right? Must not be an algorithm. You guys would be surprised at how many people attack me over ICT concepts. It doesn't make any sense. Like, I trade my way, like, kiss my ass. Okay? Like, I don't attack nobody. Unless you're an idiot on social media trying to pull people to the slaughter to buy your shitty course. Other than that, mind your business, right? But we could, again, see that this is kind of holding up in that 50% level. So let me actually mark that so you guys can keep that in mind. Let me actually mark that, and then let me mark this too. So the 25% and the 50% of this weekly wick, or a weekly or monthly bullish order block. So it's still remaining above that. So we don't necessarily like order blocks to hang around so much like this if it's going to react to a level. Imagine if this was the 5-minute chart and this is what you're seeing and you're trying to go higher, right? Just think about it. It'd be like, the longer it hangs around, the less I'm really getting behind the idea, the less I'm trusting it, I should say. Doesn't mean that it wouldn't work out, but timing, how long something spends, we want speed, instant feedback with what we do. Sometimes it makes you wait a little bit if there's like a news circumstance or whatever. More often than not, where we look to trade, the things that we identify, the models we use provide instant feedback. And if we don't get that instant feedback, there's a problem. Or there may be a problem. It may arise. So you turn in, you go from how much can I capitalize on to, okay, preservation mode, right? Risk management mode. So yeah, we'll see if that has any real impact. If we go to the weekly chart, we could still see that order block, I think that monthly order block is the reason why we're not getting this to completely blast through this. That plus the quarterly fair value gap. These are strong, large, long-term levels. And so you can kind of see the higher time frame, larger context of why this is kind of stopped. It hasn't fully given up that fair value gap, or it hasn't given up the fair value gap or the monthly bullish order block 50% level. It just literally set a low there. And now we got a change in state of delivery here for the DXY. Actually pull this over. So yeah, with this holding in there, we're going to continue to watch how that unravels. If it does stay above these levels, again, it's going to be hard to really trust that price is going to really break down unless it does another run back below this monthly fair value gap, which is there. Notice how we went right down below it and now we came right back above it. So we really, aside from the monthly bullish order block levels here, the 25 or 75%, 50%. We also have this one up here. actually drag that out. So yeah, if price definitely gets above this, we're targeting the highs. Right, we've been continuously bearish, going lower, reaching lower, because this reaction off of the quarterly bearish fair value gap. And we targeted a bunch of things like the gap down here. I wanted to see if we can get through this. It's attempted to multiple times, but it's had a hard time for whatever reason, right? So we'll see if that wants to continue. Because we've gotten now in this upper portion of this order block, it becomes a little bit more trustworthy, especially if it was to get back above this and close above that. Or we may attempt to try to take this high out one more time. Getting up above this is also a monthly bullish order block as well. So we got two. We got one here, and then we got one here as well. So if it gets above that one and this one, again, it's going to require a lot for us to see a pretty dramatic decline, especially if the yields continue to go higher. Now, if the yields drop, that makes it a little bit more likely if these fail, right, and price was to like get down below to this level down here and break down below this low, it may set the stage, set the groundwork for us to get this larger move to this quarterly low. This is, of course, a long-term perspective. For the coming week, what we got to just observe is the fact that, you know, we do got relative equal highs up here. This is at a quarterly fair value gap, right? We've got equal highs there, dramatic equal highs. And we're coming off of a pretty solid reaction from that monthly fair value gap or monthly order block 50% level, which is right in there. Okay. So this whole little range in there is important. 75%, 50%. If this was to break down and get over to this level, basically breaking outside of this little box I drew down, we would then look to target these lows, this low, this gap, and then this one eventually. This is also, again, for context for the coming week, we're also inside of a inverted monthly fair value gap. We're also above a bullish breaker now that was basically talked about all week last week. And then this wick here, right, is pretty dramatic, but it stayed above this high to that low. We stayed above the 50%. It just came back to scare people out, pulled these people in that had buy stops above here, pulled them in, scared the crap out of them, hit their stop losses. Then they attempted one more time, coming down to pair up this previous day's low with a, I guess it already took the previous week's highs, but it was a previous day's high here, right? So previous day's low, swept, weekly bullish order block, delivered, targeting the previous day's high, Sunday's high. And then it just rapidly moved, and we've now met a breaker in here. Okay, if we go to the weekly chart, we've got that lower portion of this potential bearish breaker, but you know, we're gonna have to see how that behaves. If it trades through that level, then again, it's just more reason for us to target the equal highs up there. So again, we're going into this week monitoring how this breaker here is going to react. I can take that volume imbalance, simply move it to this breaker here. So let's see. So we've got that daily breaker. So again, with these quadrant levels and that monthly bullish order block, mixed with this daily bullish breaker, we have multiple PD arrays that have not only been violated, but are also supporting this going higher, alongside the yields possibility of holding in here. So we'll see what that wants to do if it wants to break out. If it breaks out, this move is to be trusted, and it'll go and probably reach up here, in which case I would label this whole move lower to higher as a market maker buy model. And so depending on how we open up and deliver next week off of CPI, that's going to be a very strong deciding factor as far as whether it's going to be likely for this to be taken out up here. And then if that is proven to, you know, be targeted, Let me see where we're at with the 50%. So yeah, we're beyond the 50% of this potential market maker buy model range in here. So that is significant, right? Alongside some of these lower levels, unless it breaks this breaker, I still want to see this potentially reach for the buy side delivery. You know, it's done a lot, so that'll be my opinion on the DXY. We'll see if it does want to open up. Maybe it wants to reach down into this. It may not want to because of the monthly inversion fair value gap we have now. This breaker, I'm going to make it a light color. I'm not too sure how strong that breaker is going to behave or how reactive it's going to be. This breaker is a counter PD array to this run higher, right? So this run higher, right? If you were bullish, mapping out a counter trend move because we now hit a bearish breaker, hit a bearish order block. That's a reasonable framework to try to calculate a retracement. Even if you're bullish, this is a way to build a framework for counter trend trading. For those of you that may be contrarian or just want to add another layer to your arsenal of opportunities, you can be bearish in a bullish trend. You just have to cut your risk in situations like this. If you're risking 1%, you have to risk at least 25% less, preferably half less, right, than your initial risk. So yeah, validation is going to be this breaker. If we break down below that, I'll classify that as 3 PD arrays being violated, simply getting down below here. Because we got the monthly inversion, we got the breaker, and then we also have the swing low. We also have this wick in here too, so that's a PD array in itself. All right, so yeah, let me know in the chat. Does everything make sense? Yo, what's up, Matt? What's up, Matt? Could internal range, could quarterly internal range liquidity be higher time frame now? Quarterly internal range liquidity on the DXY be higher time frame now? Are you asking in like a general term? Or are you talking about like right now? Could quarterly internal range? I mean, that could be the case. What he's referring to is this, right? Like if you think about this as the 5-minute chart, it may make sense for it to want to run back up into that. We've hit this bearish breaker, so ideally if it was to be bearish, I would like to see it hold below this 50% level. Look at the wicks, how responsive they've been, and the fact that we swept this. So something you got to keep in mind with this situation is if this is a bearish market, if it does support bearishness for the next, 3 months, this should act as a balanced price range already. Because we already have sell side offered, buy side, sell side, breaker. We've had a response. That's why it's been pretty reactive. And it's not really trying to get too deeply into that because it's been bearish. We'll see if that changes, obviously. It could reach up, target this one more time, and still not invalidate the more longer term bearish sentiment. I can say that if it gets outside of this fair value gap, that'll be enough for us to target really rapid buy side delivery. I'm not too sure what the likelihood on that is, given all the stuff happening around the dollar. But I mean, in a general term, you could definitely use quarterly levels for narrative. In this case right now, we'll see how price decides to close above the 50% of this. Because again, the wicks are important, right? If we trade up, hit the 50%, and then we get just a dump off, then price may end up looking to sell off. But again, that market maker buy model high, those equal highs that I mentioned that were at this quarterly fair value gap, you could see that this is a quarterly high as well. What the hell did I just write? Oh. So yeah, you could see how this was the quarterly high. Or it is the quarterly high. So if this is a market maker buy model, that is in fact what we're looking at, right? If it does prove, given the things that we've just kind of zoned in on for the coming week, if it does end up confirming that this is in fact going to be this market maker buy model, we are above, we have one box checked. We have traded beyond the 50% of this down movement in a potential market maker buy model. Now, again, if this fails to continue to hold these levels and it gets down below our invalidation, which is below the breaker, I want you guys to keep that in your note, in your notes for the DXY. This is our invalidation level. If it was to fail after we've taken out the 50% level in here and then decline and get down below the breaker level there, we'll have a failed market maker buy model because it couldn't trade beyond the 50% in any meaningful capacity of that sell side of the curve. And then we'll also have the 3 PDA rule in alignment. So you'll see two of my validation principles converging: failed market maker buy and sell or sell models, failing to get above the 50% level or attempting to, but then failing to follow through. And then the 3 PDA rule down below us. These are very powerful, simplistic tactics that people undervalue. I definitely gotta say that people undervalue the power in what I've just described and have been describing. It's something ICT taught. I picked it up straight from one of ICT's videos, and just started really applying it, because most people don't talk about this stuff. They don't talk about how market maker buy and sell models can be used when they fail as a validation tool for narrative. Like if you're bullish and you frame something out like this and the market maker model fails, market maker models are a sequence of a way to phase out price delivery in a current market condition. So if that current market condition is telling you one thing and it ends up changing and does something else, failing to deliver that full sequence, and it breaks through multiple PD arrays, I mean, there's no reason to hold on to that initial narrative. It forces you to change direction reliably, right? Because market maker buy and sell models, this is another thing most people don't know. Market maker buy and sell models are a variation of a balanced price range. What's happening when a market maker's buy model happens? We're delivering sell side, delivering buy side. So if we take out that high, 50% of that market maker buy model is going to hold up at least, right? We want to make sure that it's holding that. It could trade into it a little bit, but for the most part, the delivery through this high up here, once it breaches that, should be able to behave as a BPR. It's another reason why market maker models are so powerful, why it's the core of what it is that I use, what I do. It's just like the glue that makes everything fit together. It makes everything make sense when things are supposed to happen, when things are more likely than other things, when it's going to be a little bit harder of a condition to trade, the accumulation phases and the start of the distribution phases, right? Basically the two on the left side, two on the right side, right? The one that sets it up going lower and delivers it going higher. Those 4 little phases that are in the middle of market maker models. And so this should set up the first phase to the buy side, right? If this is going to be a buy model. And we should not see this breaker get taken out. Breakers, here's another gem for those of you guys that are on YouTube with me that I talk about a lot in my private group. Breakers are also balanced price ranges. So you can imagine why, if a breaker was to collapse, we're invalidating a balanced price range. Same with an order block. So when they get taken out, what do? You switch direction very reliably. Because if we're going to continue to deliver to the buy side and we're looking at this higher time frame structure, yeah, balanced price ranges are everything. And another thing to go side by side with what Harley said. Harley's one of my best students, by the way. I mean, I can't even call him a student really anymore. He's an independent trader. It's amazing. So good job, Harley. But to go hand in hand with what he just mentioned right there, the balanced price ranges are everything. Every single PD array is essentially a balanced price range, right? Well, most of them you can consider as a BPR. All right, that's definitely something to go study. But if balanced price ranges get invalidated, you know that you can now switch, because here's another thing that ICT has constantly mentioned. Every PD array has an inverse characteristic. Okay, so if a breaker fails, you look at it from an inverse perspective. It's a broken balanced price range at that point. It's also an inverted balanced price range, right? They're different variations of BPRs. But again, that's a huge statement because they are really super powerful. And most people don't understand what they are, let alone understand that there's so many variations of them. And the rules of engagement when it comes to using them for entry, for validation, right? Most people don't know these things. And if they do hear about it, they don't apply it because they think it's too complicated or whatever the case may be. There's a lot that goes into these things, obviously. But at the same time, let me see, ICT, let me see, 100%. ICT has put them in a language that people can understand exactly. That's why he looks at every time frame on the intraday matrix as they are just time-based ranges in candle format. Yeah, exactly. Exactly. All the models and all these things, it's just a variation of balanced price ranges. Price, right? But time, then price, right? PD arrays, liquidity, and then time has to do with the macros and kill zones, day of the week, time of the year, so on and so forth. And that's why seasonality is so powerful too. See, I just dropped like a whole ton of gems on you guys right now. If you weren't paying attention, hopefully you are, because this stuff changes people's trading. Like it really does. And I'm showcasing a lot of stuff every day in my private group, but I'm also showcasing obviously here on YouTube as well. Are you posting videos on YouTube? Harley, I'm telling you, bro. When you gonna hop on the content, bro? Trying to see some more content, brother. I know you're really busy and stuff. You got a lot going on. But Mike's giving you a nudge now. I'm giving you a nudge. like, bro, show the world what you have become, bro. If you choose to do so. Post on social media, but maybe in the future. Yeah, I encourage you to think about it, Harley. I think you have a lot of value that you've been able to develop. I appreciate the trust that you gave me to play that small role and give you that nudge, right? Give you some ingredients, and you've just taken it and made it your own. And so I'm really proud of you, bro. If I don't say it enough. See, Harley is definitely a needle in a haystack. He's definitely one of the fastest developing students I've ever worked with for whatever reason. But that's the beauty in trading, right? We all have our own unique journeys, and we all arrive at a different time, and it's uncertain, right? That's a heavy uncertainty. But if you're around the right people, if you're around the right community that's supportive, like this community here, like my private group, you have a lot of the ingredients, and you have people around you that are actually using it, that know how to teach it, that can help amplify and glue things together that ICT has taught without you feeling like they're renaming things and trying to rip ICT off, because there's no real integrity in that. Let me see. I just posted my model in a PDF and timestamps, train plan development section in private Discord. Okay, I'll go check that out. Any of you guys are in the private group? I didn't catch that. Oh, okay, you just posted it. Okay. But yeah, go check that out, you guys. I'm definitely going to check it out after we hop off the call. See, anyone in the private group can view YouTube links. Okay. All right. Sorry, I just muted myself on accident. But yeah, I'd love to have you hop on a live call with me, Harley, and kind of go through everything just to hear, so everyone can hear from you. I'm definitely curious too, to hear what you've discovered and created. It's amazing. So yeah, good job, Harley. And all of you guys that are working so hard and that, have supported me, even though the community is really small. this community punches well above the size. I can tell you that. And even my students that are and maybe not exactly where they're trying to be at, their understanding is better than probably 90% of people on social media simply because of the depth that we take things. The understanding is vast here, and I don't claim to know everything, but the way that we operate, the way that we apply things is absolutely, I mean, it's amazing. I don't want to pump it up too much, but uh, it's absolutely amazing. You could just say that. And we prove it. Not only me, Harley proves it, right? Other students in the private group, and even those of you that are on this YouTube channel, you guys prove it. So it's not just like talk. It's not just shiny objects. And it's not all overly complex either. So you see Harley, that's why the private group is gold. Being amongst great traders like Byron Nico is right. Yeah, absolutely. Success a lot of times is influenced by proximity, who you hang out with, what you keep around you, content you allow yourself to consume, the mindset that you're developing with the conditions you're building for yourself in your life. It has a heavy impact. So if you're around success, if you're around discipline, if you're around people that follow rules, that know what they're talking about, that prove it, I mean, it's just a matter of time before those characteristics and traits fall onto you and you have no choice but to adapt and become that. Because, if you're in a group and they're doing these things that are positive and you're breaking the rules and doing things that are not in alignment with the success that you're seeing, you're going to have a conversation with yourself. Like, I want to be like that, right? Like I want to have those characteristics in my own trading. So what do I have to do? And that's when you ask questions and then we tell you, right? In any community that has success, right? And there's a decent amount of them, but ours is definitely one of them. It forces you to change your thinking. It forces you to stop over trading, especially because I like to have all of you guys announce how you're doing, at least to me individually, so I can hold you accountable. But then we also have the group, and it's not just me that's a good trader. We have like a good amount of traders that are really, really good, and we're all here to help. So that's what makes the private group and this culture and community that we've built has it's made it amazing. And it's all thanks to you guys that have been with me for a long time that have helped me make the community what it is. And I just show up and try to be consistent with you guys, show you that you can have someone that's reliable, that really does this, that isn't just going to send you off with a course and make you go do it on your own. Because that's something that I despise. That happened to me way too much. So I refuse to be that way. So yeah. That'd be classic Tony education. Yeah. Yeah. Absolutely. So yeah, I'm gonna check that out, Harley. I'm gonna check that out for sure. But yeah, getting back over here to the DXY. Again, all the gems that we just talked about balanced price ranges and all these different things, like the perspective at least, like I want you guys to really try to focus in on the answers to those things. And again, if you join the private group or hop on with me live here on YouTube all the time, it'll naturally just fall into your laps. But obviously it's more immersive in the private group. So if you wanted more of that type of experience, the private group's always available. On a one-on-one capacity, though, it's every quarter. But just to simply be part of the live calls every day and be part of the community and have some of the resources that are in there, it's literally unrivaled. And it's more in reach for everybody than most communities, because trading's my main income. Okay, so there's that. So again, we're going to try to see if we can map this out as a market maker buy model. If it fails this and breaks this breaker, it turns us off and we go the other way. So we want to start this week thinking that we may open up, drop lower. We have this gap in here. You can take the volume imbalance up to the gap, that whole entire range. So, I mean, maybe I'll just actually I'll just pull that down into that too. This is the weekly fair value gap in here, but I mean, it's close enough. We don't want to see a breakdown through that. That's the whole point, right? And just in that vicinity, we don't want to see a breakdown below this level, because if it breaks this fair value gap, that's breaking multiple PD arrays already, let alone breaking through the wick, let alone breaking through the daily breaker here. That would just force you to change. And then the failure to deliver the market maker buy model on this time frame, it's just even further reinforcement that price is not going to be willing to want to continue going higher. Okay. So yeah, that's my opinion on the DXY. Hopefully all of that made sense. Structure that properly. So yeah, moving on to the currencies. Let's go to the monthly chart for all my currency traders. We're just as accurate with currencies too. Those of you that trade currencies that watch me or watch the content in general, you guys know. It's definitely been nasty overall. This is part of the reason why I kind of moved away from Forex. We're still calling moves that are really accurate, still getting direction correct, and it's all universal, so it doesn't change. I mean, we go to crypto and all types of stuff and still point to the right direction. Gold, silver, other commodity, it doesn't matter. You know, it's all the same. Just looks different, right? Same contents inside, different package, right? So yeah, if we watch this, I did call for these highs to be taken, and oh, what do you know? Ended up taking those highs. If you go back to the Sunday call, or just, you know, calls from maybe 3 weeks ago, since we were back here, this has been there on the chart. We've been calling for this to target that. So if that continues, right, this may not continue if the dollar goes higher. It won't. Matter of fact, it will not go higher if the dollar does decide to continue to ramp up this market maker buy model. Actually paste that. So keep that in mind, right? So depending on what the dollar decides to do, because it is big dog when it comes to these other currencies, we will see how that's going to impact this. It looks like we have basically inverted this fair value gap. So that's not a very good sign for price to go higher. We do have the SMT up here at these highs here. We had it up here as well, and that started the initial drop off. We called that as well ahead of time, and all the targets down there. Go back and look at the videos. But yeah, this looks like if this continues, if the dollar continues to keep its momentum going higher, keep its interest, I should say, to go higher, if it continues with the yields going higher and the bonds do end up declining, this will be dragged down so aggressively. And like it'll kind of go hand in hand with seasonality, with the dollar being pretty strong and the other assets seasonality being a little bit weaker, right? And then you can also add on the world events. Who knows what headline's going to come out that may be negative and used to initiate this. We may have some craziness happen with interest rates or the government shutdowns coming. That's another thing. Be aware. Another government shutdown's coming because one side of our government doesn't want to allow certain things to be taking place in the U.S. They want their way or the highway, even if it's bad for the people. So they're going to continue to try to push for us to continuously print trillions of dollars a year, inflate our dollar, which is why it's going to keep, oh yeah, that'll be another reason why this is going to keep rallying. If the government shutdown doesn't go through and they're going to have to print more money, keep your attention on things where they're talking about the U.S. printing money. If money shows up on the screen, think inflation, you know? So this has been heavily manipulated to go lower as well, right? For the administration, because they wanted to really drop prices for exports. Of course, all of that is just like how the sausage is made, I guess you could say. It doesn't really affect day-to-day decision making. Overall, long-term, it does have an effect. You do want to understand it at least at a basic level. It's not 100% necessary, but I mean, if you're part of the financial industry, it's good to have at least a basic understanding of how things work, because it does help. And paying attention to headlines like for the tariffs, for wars, anything like that, it's going to definitely be something worthwhile to pay attention to, because it does have an impact, like instantly, pretty aggressively, at least with what's happening currently. Wars, economic things, trade deals, stuff like that. Okay. Fed speeches, interest rate announcements, all that stuff is very impactful. But yeah, so hopefully the dollar makes sense to you guys. We'll see if we can stay above our invalidation level, which is the breaker down there, okay? And this should end up doing the opposite, like I mentioned. So yeah, if the dollar continues to rally, we'll see this hold below this. And then we will potentially target the low here, this weekly low. That'll be my initial objective on our way to possibly targeting this down here. So I appreciate your guys' patience. You guys always are so patient with me on these calls, and I appreciate it. Hopefully you guys get value with these long calls. Trying to think. Yeah, there's really not much else for the currencies here. We also have the bullish order block here, so we got to watch that. But yeah, this here is a pretty significant sign. The price is probably going to hold. The only way that I'll end up being bullish on this, at least on the euro again, is if we get the DXY to drop and then we get this to be overtaken. Otherwise, this is here's that beautiful word, right? Balanced price range. Overlapping fair value gap, overlapping to the downside, right? Buy side, sell side. 50% of this should hold. We should not see price trade back through it if we are going to be bearish. So if we trade into it and stop and then immediately break down again, that's a strong indication that price is going to go lower, right? But if it was to displace and get up above this, that's a change in state of delivery above the down candle. Order blocks our balanced price ranges. So then we should see the 50% of this hold plus the reclaimed fair value gap. And then we should see that continue to march its way on through the highs up here. But for now, we're going to have to observe how it behaves going into this new week. All right. So yeah, throw a 1 in the chat if that makes sense. If everything up to this point makes sense, let me know if you guys got any questions. Otherwise, we will go on to the beautiful NASDAQ. Okay, one. Referring to the euro dollar, would you say is the current dealing range? So let me ask you this, Fritz. How do you define a dealing range? What has to happen? What two things have to happen? It's only made when a high is taken or a low. Okay, so you're pretty close. It doesn't refer to one high or one low. It refers to buy side liquidity and sell side liquidity being taken. Then within that range, price breaks out of that range. So essentially, like this, for example. So sell side's taken here, buy side's taken here. That creates your new dealing range, right? And then same thing is true if it goes lower, right? Buy side's taken here, sell side's taken here. That becomes your new dealing range. And this is a fractal idea. So of course, the higher time frame dealing ranges or range of opportunity is going to be the most important when you're trying to structure what price is doing overall and what your current overall dealing range is within the narrative that you're trying to paint. Right? This is literally how ICT teaches it. I see a lot of people teaching dealing ranges, not how ICT teaches it, which I don't understand why people can't just like why can't they just keep it the way it was taught? Why are you changing something that's near perfection? Like, you may discover certain things that repeat that ICT may have not talked about before, like my Razor model, the flagship model that is my model, because ICT's never talked about it. It's something that I've coupled together with a couple different PD arrays that happens all the time. Very easy to see. And I'm assuming that it's something that ICT probably knows about, but he's just never talked about, right? He's described different elements of it, but he hasn't put the sequence into a model, right? And since ICT has 81 different PD arrays, okay, basically 81 models for entry, you can imagine that a student that's like having strong due diligence, digging through everything with a fine-tooth comb, like you'll end up finding stuff that ICT may have not talked about, but it's incorporating the things that he has already talked about, right? In terms of the PD arrays that he has talked about, or certain signatures that continue to repeat. I mentioned another thing in my private group too, another potential entry model as well, using Wix. Certain sequence when it comes to Wix. And then, of course, the balanced price range ideas and whatnot. There's models all throughout that, and lots of continuous things that form within the realm of balanced price ranges and all these other different repeatable things that you probably catch but just don't realize as a PD array, right? Or something that you can see as a model. That's where experience comes into play. You're able to understand how to build a model. And ICT has given us all the elements, whether you're in his charter group or if you're on YouTube, which has, a lot of different things except his commentaries, and just the group, which, there's a lot of different people in that group. But yeah, so I hope I answered that question, Fritz. Okay, cool. Let me see. Okay, cool. Would the current bearish move be a retracement to equilibrium? It very well could. It very well could. I just personally don't like the fact that the dollar looks like it's going to go higher, and this has now been overlapped. Those are the things that make me feel like this may not just simply be a retracement to equilibrium, but it depends on what the dollar is going to do, right? If the dollar collapses, then yeah, we'll see this order block in here probably hold, and we may end up seeing price get up. But that's why I said we need to get up above this for me to be confident that it's going to go higher, that I would get behind buys. Does that make sense? Hopefully that makes sense. So yeah, it's the little nuances, right? Like I've been saying. So let me see. Harley said every different PD array is an entry mechanism in a market maker model, meaning he has an entry no matter. Yeah, exactly. Yeah, exactly. Right? He has so many different entry models, but you don't need all of them. And again, once you get to a level that you understand that you have something that works, you just overtrade and over leverage, but you're able to call bias and narrative, or you have some other mental things that are going on, but you know that what you have is enough. which, the process that we talk about literally covers every single basis from start, like what we're doing today, to finding your entries and real-time uh, institutional order flow observations, validation, invalidation. Everything that you really need as a trader is identified, right? And the different tactics that I use, there's different ways to skin this cat, right? You could do all the different things in different ways, but you don't want to try to stretch yourself so thin trying to apply everything with the kitchen sink approach. Just because you learn more models doesn't mean there's going to be more opportunity. Each model has a story that you have to understand. Each model has different variations that you have to understand. Each model has continuations. Each model has validation and validation levels. Each model has a specific condition that it does well in. So you can imagine, just because we find a pattern or something that ICT introduces on top of everything else that he's taught, you can understand how when people try to apply things instantly without backtesting or knowing the full breakdown of those models, of whatever model it is, you can understand how it's hit and miss because it's bigger than just the pattern. What leads to that pattern being high probability? That's another thing that has a bunch of nuance that takes time to really dissect and experience to fully understand. Higher time frame or high probability or low probability, right? There's different characteristics that I talk about here in depth in my private group, but you can imagine that once you have something that you need to, or that you notice is working, there's no need to try to add more unless you're trying to amplify what it is that you're doing. And what you're trying to add has to do explicitly with what you're already doing. Then and only then is a time that you can potentially consider, not even for sure, but consider adding more. Like me, I will never add another ICT concept. I have everything that I need. I've literally everything I need. If I never hopped on the internet again, never read another book, never listened to another ICT video, just deleted everything, I have more than enough, right? If one thing doesn't work, I have other things. If one way doesn't work, I have another thing. If they take away something in the market, I still have other things that I can use that don't refer to anything that was taken away. For example, like the new day opening gap. The new day opening gap is going to be removed, right? I forgot when they said it's going to be removed, but I think in the summer or maybe late March. The gap visually is going to be removed. Does that mean that everything changes? I'm sure everybody on social media to get clicks is going to be saying the algorithms changed and all this other nonsense. ICT has explicitly talked about this numerous times because this proposal has been happening for so long. The levels are going to remain, right? The location, that little area in price where the new day opening gap is, you still want to mark those even when they take it away, because it's a sensitive level, right? It's just the way it is. Same thing if they remove the new week opening gap or any of these other things. Those levels are still going to be impactful, but they can only do so much. They can't change a lot because the dynamics are already the way that they have to be for the market to deliver to liquidity, right? And order pair and manipulate and be a zero-sum game. We're already there. The only thing left is to become more efficient or do things like taking away a certain gap in price, right? Or a certain time element, take it away and make it 24 hours. Like that's like one of the main things that they can adjust. But crypto works with ICT concepts. So crypto's 24 hours. So what would change if they made the markets 24 hours? Nothing. Okay. It's all the same. They can't do something that's too dramatic because the dynamics of how commerce and things are done on the back end in the marketplace, they can't change it. They cannot, because it wouldn't make sense for them to do so. And just because a lot of people understand a certain concept doesn't mean even if they're successful. I heard that retail like the retail crowd had more of a high percentage gain than institutional traders. So individual traders in their individual accounts, at least the ones that are big enough to be tracked, did more percentage gain last year, 2025, than the institutions did. And that was the first time that this has happened in history. That is a crazy statement. Yet they're not changing anything still, right? You would think that if something was happening, right, if that was a bad thing, there's still millions of people blowing their ass out, okay? Like there's people that have traded ICT concepts for so long, and they can't make it work because psychology. Human nature won't change either. That's another reason why the algorithm won't change. And if they make it any more difficult, any more of a zero-sum game, opportunities are not going to be there. So guess what? That removes liquidity from the most liquid markets in the world. If they're not going to look to do that. You think these people that run the world, that run this, you think they want to change that? You think they'd want to take away this moneymaker that's on autopilot, that just is a zero-sum game where 90% of people still fail? You think these people that are in those positions want to remove this? No matter what happens in the world. Even China has a stock market. Right? So it's not going nowhere. Okay. There's a lot of people that wish the US was not the way that it is, as free as it is and whatnot, but there's still an overwhelming majority of people that love the idea of America. So it's just not going to change. Okay. So let me see. But yeah, so again, we'll look and see if this can hold in here. This will be where I start to consider that we'll be back bullish. It's still not fully entirely invalidated. This is a very strong sign, though, that it may look to go lower because of the dollar and the bonds, or the dollar and the yields. All right. So we got to see what's this candle going to do. Is it going to open up like this? Fail, right? Be a bullish candle in here. Stop at the 50%. And then give us a displacement. In that case, if that happens, then we have targets for the next couple of weeks, right? Especially if this candle there is a bullish candle and then we break down below it. With the fact that we inverted this, I think, that's one of the strongest signatures that price is going to tip over. So yeah, we'll see. Save this prediction, right? Because I'm pretty confident that if this scenario holds right here, we're going to go lower. We'll have seen an early sign by how it delivered this fair value gap. But if we get up above here, just rest assured that when you show up to this channel, when you're hanging out with me and my beautiful community of amazing people, right, that I love, okay, like I really love y'all. Y'all are my family. But if you show up here and you're new, or even if you've been here for a little while and you're still trying to get the hang of things, you can rest assured that we will almost always know where price is going to go. Got to say almost, because I'm not always correct. Most of the time, we're correct. Most of the time. And when we're wrong, we're able to get back in line because of perspectives like this, what I just mentioned. We're able to get in line with price, even if we initially end up wrong, because we have our validation process that has proven over the last 3.5 years that I've taught it publicly. Well, privately, and then last year publicly, like full throttle. It's proven through time that it works, right? It's not just me saying this anymore, right? Or saying, oh, it's in the private group. I've shown it publicly. I've my students coming out that have came to me to help them glue things together in ICT's concepts. They're doing it too, both here on YouTube and in the private group. So it's undeniable. So you can rest assured that when you spend time here, your time is well spent. You know, we talk about a lot of things, obviously, but yeah. And I appreciate you guys' patience through a lot of the explanations and whatnot, and me answering questions too, because I've had some people bitch and complain about, why are you answering questions? Just get to the chart. Excuse me? You can go somewhere else, okay? Because the whole point of this community is to help, right? The whole point of this channel or my private group is to try to pull others up with me, you know, because I could just do it on my own. I could just go trade and, you know, ignore the world. At some point I will, because it's getting too toxic out here in the world, you know, and it'll probably be best for people to live very private lives while you can. You know what I mean? Eventually, not right now, or maybe even anytime soon. But eventually, I think that's a good goal for us to have. Live private lives, maybe help whoever you can, but privacy is a virtue. At least, at least when you think about it, right? See, the concepts work on cryptocurrency. I got a nice long-term hold position on a coin using WMG concept. Yo, Tony, it's funny you say that. I manage my personal retirement account with the same stuff that I teach you guys about here. My personal account, long-term, my portfolio for my retirement outside of my trading accounts where I like actively day trade. My long-term portfolios have averaged over 33%, which I've shown. I showed last year and the year before. They've averaged above 33 to 35% year after year. That is about 13% higher than Warren Buffett's yearly average. So, I mean, you could technically say, although the money that I have is not as much as Warren Buffett, you could technically say that these concepts, if you use them long-term, give you a pretty solid possibility, got to be careful with what I'm saying, of being pretty spectacular, right? Nothing's guaranteed. I'm not a financial advisor. This ain't financial advice. But you can kind of just, see what the skill set can do for you. It's pretty spectacular. Let me see. You got in December. Beautiful. For those of you that may be wondering, I trade or long-term invest in XRP. I'm not telling you to invest in any of these things, okay, that I'm going to mention, but this is what I'm doing. And I encourage you to go look into it, or go do your research on the companies and the assets. But things like Chainlink, things like VeChain, things like XRP, things like obviously Ethereum, Bitcoin. Those are like the smallest portions of my portfolio, though. I'm more heavily weighted in XRP because I understand the company. I understand what they're doing. They've been a banking business frictionless transaction company trying to revolutionize the way that payments are made and transferred from millions and billions of dollars to the average everyday person. But XLM is the one that's for peer-to-peer, like Cash App type stuff, type of vibe, right? Like how the peer-to-peer transactions happen. XRP is going to revolutionize how fast it takes for a mortgage to clear. Like that's the type of technology impact that's going to happen with XRP. It's not just a currency, a cryptocurrency. The use case with XRP, given the fact that it's so small in value right now, is the sleeping giant. Again, this ain't financial advice. I don't encourage you to invest in anything that I'm talking about. This is just what I'm doing and something I encourage you guys to go look into. I've been screaming this stuff from the rooftops as well. If you go look at in the free Discord, let alone the private group, about this specific thing and who I study. The guy that I study for crypto, I will gladly push you guys to him. His name is Coach JV. And Tall Guy Tycoon. Those two are absolutely the best content creators about investing that you'll probably ever watch, right? In terms of understanding the stock market, understanding crypto, different investment, like long-term business scaling type of conversations, asset allocation, how to protect your wealth. Like they are the absolute unrivaled masters of this stuff. or not, maybe not master, but like the best influence, I guess you should say. They don't trade like I do. They don't day trade like this. They don't even day trade whatsoever. But the way that they describe certain things and do analysis and how they understand certain companies and what's important, those are two of the people that are very much encouraged to go look into. All right, Harley. Appreciate you, brother. I'm going to check out what you sent to the group. God bless you, brother. Appreciate you always being such an asset. Appreciate you always sharing your wisdom. And more importantly, thank you for the trust that you've given me over the years, brother. It means a lot, meant a lot. And it's just amazing to see you thrive and do what you've been doing. So I look forward to seeing how far you go. But yeah, I'll talk to you later in the private group. Just let me know. Have a good rest of your day. And yeah, and you're welcome, brother. So yeah, that's just the crypto thing and those people that I just mentioned. That'll be a very fun thing for you guys to look into. I promise. They're really good content creators. They're really fun, and yeah, highly valuable. I mean, I can't even describe to you. Similar to the value that you get in my private group or on this YouTube channel when it comes to this stuff, right? It's just, it works. The stuff just works. And there's no other way to put it. And I prove it. They prove it too with what they do. It's just amazing. It's hard to trust people in this industry. So them proving it, whoever that is that you're allowing your attention to be given to, you got to be very cautious. That's why I don't shout out a lot of people other than my students and a handful of mentors like ICT, my other mentor, Joe Miller, and a couple friends that started before me. And then, of course, for the more long-term portfolio management, like more detailed stock and economy-based understanding, I encourage you guys to go look at those two people that I mentioned, Coach JV and Tall Guy Tycoon. They're absolutely amazing. And I think you'll think the same. If you guys do go check them out and you haven't before, maybe you haven't heard me talk about this. In the private group, I share this stuff all the time. But if you haven't heard me talk about this and you do go look at it, I'm curious to hear what your opinion is, because they are definitely changing lives long term. And, we're trying to impact in the short term plus long term, right? Because it's kind of like a multifaceted thing. So yeah, hopefully this made sense so far with the currencies and everything up to this point. I will get you guys up out of here. It's already 2 hours. So appreciate the patience. Appreciate you guys sticking with me and going back and forth with me. It's fun to just hang out, right? Like some people are just too serious all the time. It's good to hang out. Yeah, money management is imperative. This year, I'm definitely taking things serious and to the next level. Yeah, hey, Tony, I believe you, bro. You've taken it serious all year last year. You're now starting this year. Think about this, Tony. You discovered me somewhere close to right now last year. And if you think about how far you've come in your understanding, any of you guys, right? If you think about how much you've learned, how far you've come, just from this YouTube channel and those of you in my private group, I mean, you guys, it's just crazy. It's every day, right? It's not even possible. It's impossible to have not grown exponentially in your understanding with the stuff that we talk about here and in the private group. Because I don't hold back. There's not much to hold back. You just get more time with me, more experience with me in the private group. And, more of a handheld environment where you can ask questions, and you get a bunch of people that are also doing the same things, telling you how they grew and the impact that the community's had and what to focus on, lessons they've learned from being with us. And it's just all around just an amazing culture. I wish I would have found something like this. I'm glad that I found ICT, right? Because I probably would have quit trading a long time ago. Before it even could begin, I would have probably quit. I was close. I was very close. But I never thought like, yeah, I'm gonna quit. I was like, I don't know. Can I do this? I have a kid coming. I'm broke now. Like, COVID's happening. What am I gonna do, bro? And God said, "Oh, here, look at this," and the rest is history. So thank God, right? Thank God, because if without Him, none of this would be possible. I would have gave up on myself a long time ago. So thank God. Thank God I didn't. Tony said, it's been a privilege and a blessing. I appreciate you saying that, brother. I appreciate that you feel that way. I do try my best to give you guys value, answer your questions, and I try to provide stuff that's not provided on the internet, or at least not provided a lot. There are a lot of good people. It's undeniable. There's a lot of good people in this industry, in the realm of ICT concepts, and in other ways, other styles of trading too. There's good people, but vast majority are, let's be nice, right? The vast majority of them are just not worth listening to. Okay, let's keep it nice, at least reasonable, right? Because they don't prove anything, and the track record of people getting blown out is much larger than people doing well with their stuff, and it's unfortunate. So yeah, with everything that we've discussed so far, from the bond yields, DXY, foreign currencies, coming up into this asset class, we do still have something that I have been pointing to for a while now. We continued to push price higher last week, simply because we just haven't had the confirmation to decline. What kept us going higher, first and foremost, from that call last week, we were looking at this wick here. Okay, I wanted to see, because we dropped down so aggressively, I wanted to see how this was going to respond to this. And we ended up making a fractal low here. Price ended up trading into this wick in here. Once it got above that, that was enough for me to then target the buy side here and up here. And all throughout this price delivery, that's basically what we ended up doing. We had to consider the fact that because, all the other things are declining, DXY was rallying, things were looking like they're somewhat tipping over. And we also have the SMT here at the highs with the Dow. The Dow's breaking new all-time highs. The NASDAQ's making, not necessarily all-time highs. Then we also have the S&P that's pretty close. So if the S&P continues this, it'll probably drag this up. But with the correlation happening where the dollar's going higher, somebody's lying right now. Who's lying? We'll find out in the next couple of weeks, if not this coming week, right? If we were to drop off and tank below this low, that's enough for me to pretty much shift the narrative from bullish to bearish, because then we'll have the gap in here being violated. We'll have the wick being violated. We'll have a swing low be violated. We'll have an order block being created. So we would have to see. I'm especially bearish if we were to take out this low. That's the full on, we're completely done going to the buy side. And we're probably going to look to discover some more lower prices, probably target this. If we break down below this low, I'm definitely looking here and here. And we'll see what happens beyond that. Everything else is way too far to even consider at the moment. But for now, right, we're still holding above the wick 50% level. We are still now above an order block here. If we go to the weekly chart, we could see where the lower portion and this previous candle, this previous weekly candle, what it all reacted to, right? On this time frame, we have the wick quadrant. It couldn't even get to the 50%, so that's bullish. We couldn't even bust through or close below the 50% of this order block. That's bullish. And we're not really having too much of a easy time staying below this gap here in the volume imbalance or the suspension block here, right? So because it's not hanging around below it or even below the 50% of it, and these levels are also being respected, that's bullish. Now, unless it was to start to break down, right, say below this wick here, right, basically this low, that would potentially still remain the case, right? Unless it breaks down below this. If it breaks down below that, then we use this wick as an inversion. We'll start to use an order block. We'll try to invert some of the gaps we could find. We'll use new week opening gaps as well, right? See if they can continue to hold as resistance and see if they can slide on through new week opening gaps. And then we could then look to maybe seek sell side. But until that is proven, that would also be supported, if it happens, by the SMT that I've been pointing out here as well. And it would also go hand in hand with Power 3 on a yearly perspective. because remember, consolidation, accumulation, right? The manipulation for the second and third quarter, or consolidation and manipulation for the first quarter, and then distribution for the second and third quarter generally, and then the fourth quarter, depending on if we breach a PD array like we did here, right? This was part of the fourth quarter. I talked about the yearly range power 3 breakdown in a couple videos back. But we can see how this capped the whole yearly range. And all it did was come down, liquidate this, and then begin again. So we got accumulation happening going into the first quarter. First quarter started here, December 15th for 2026. The first quarter for this year started last year in December. So you could see accumulation happening. Are we going to get manipulation? Is it going to rally up, take the highs up here, support the SMT, and then decline with bullish DXY? You can start to see how things start to layer on top of each other slowly but surely, potentially, right? It's never guaranteed, but it would make sense, right? Index rebalancing. I'm thinking you're referring to when indexes look to rebalance the assets, basically prune the ones that didn't perform to add ones that are on their list that are performing, or that maybe are now finally like new companies that are part of the S&P 500. Is that what you're referring to? But yeah, that I think. Oh yeah, it does happen in January. Yeah. That is. I think that is what you're talking about. It doesn't only happen in January. They do quarterly audits for the restructuring. Is what I've heard it called. They restructure the indices. There's someone always managing these portfolios. Like there's groups of people, like firms and big hedge fund type things. I think it's in reference to weight in the market. So yeah, when it comes to indices and stocks, there's no supply and demand factor. So there's really not much of a weight unless you're talking about correlated asset type of weight, at least as far as I'm aware of, and the things that I use. If it's anything really outside of that, I've never heard ICT talk about index rebalancing, so I wouldn't necessarily be too knowledgeable of it. And if I'm being honest, I probably wouldn't add it to my perspective. That doesn't mean you don't, right? But that's just how I see it. But if what I just referenced isn't what that is, then yeah, I haven't really heard of it. So according to what I read, it means gold and silver. Oh, okay. Yeah, gold and silver have been completely held and manipulated for the last like 50 years. So if gold and silver were where they actually would be to match the amount of dollars that are in the whole world, gold and silver would probably be $50,000 each, maybe more. Gold would probably be double, probably 100,000, closer to where crypto's at, right? So I honestly wouldn't be too surprised. I also wouldn't be too surprised if gold and silver become heavily manipulated after all the euphoria happening. We're going to actually get to gold and silver in a minute. So I am going to talk about that before we go. So yeah, maybe we'll jump into more of that when we get to gold and silver and go see if there's been anything that's changed, and then see what that reference is. But yeah, so again, my bias is going to be bullish, right? In a nutshell, I kind of already gave the narrative and why. Isn't it interesting how fast we can determine bias after all this stuff, right? After we looked at all these assets, we jump onto the indices and look and see like, okay, the bias relative to what we see in here, DXY is rallying. There's a cracking correlation. So it may turn this around if the SMT holds and the dollar continues to rally with the yields and the bonds drop. But if the dollar ends up turning around, we'll continue to see this supported for a more long-term bullish move because we're in that beginning stage of the year. We may not see a continued move going to the buy side. It may just purge this out. My attention is up here still. I've been aiming for this, for the last couple of weeks. Well, this I've had on my chart since November. Those of you that know, you guys remember when I outlined this and then how we targeted this gap down here. It went right to it, and then it immediately came back and started attacking this. These were two areas in price that we targeted that helped us gauge bias and narrative for literally what? Since November, right? Those two specific reference points, the new week opening gap and that regular trading hours gap. Hopefully you guys remember how we used those as targets and all the way up into this level, to this moment. It's funny how they left equal highs there with this gap still available. They may look to reach up into that, tap into that, leave the SMT available still, leave the all-time high, and then look to decide to tank. That would pull in a lot of counterparty liquidity, keep the euphoria up, and then just rapidly reprice lower, causing the most pain possible. But we'll have to see, right? But my attention is here at this new day opening gap. Seems like, oh yeah, the target was met. It tapped into it a little bit. We still have a little bit of that gap, that new day opening gap. I'll let you guys go on the 15-minute or 1 hour and go look and see that so you can visually find that. It's a new day opening gap from December 11th. So if you go back and see that, it'll pop off the chart. So I'm going to look at that, these equal highs, and then the regular trading hours gap up here. This, excuse me. This is why, from this wick here, why this wick was important. If we would have traded through it, that kept my attention up here. But if it would have failed, we would have looked to try to target some lower levels. So for now, I'm going to continue to hold this order block. If we go to the 2-day, let's go see if we have, yeah, so we got this bigger, we got a weekly bullish order block here. We got a weekly volume imbalance that we can also see was overtaken as well. So we got a weekly volume imbalance, and we also got this weekly bullish order block. So my intention is now heavily focused here. I like this a lot. Oops. So yeah, we got that weekly bullish order block there, okay? So as long as the 50% of this doesn't get taken out, which ironically, the 50% of this candle here is the 50% of that daily wick 50% level. It's very ironic. So again, from this time frame, buys are not going to be turned off unless it was to breach that, because we got an order block here, we got an order block here, we got wicks holding up. So order flow is not telling us bearishness at all. I don't care what down candle forms on the 5-minute, 15-minute, 1 hour. I really don't care. This is where our narrative is going to stay. And unless this gets violated, right, and trades through it, that's an early sign. If price breaks through this low and then violates the 50% of this, we are certain that price is going to target maybe even something down here. But first and foremost, it'd be some of these weekly lows. This one in particular is an equal low, right? So let me actually mark that. So when if we have to refer back to it later, you guys will know that we had our eyes on it. If the buys were to fail, that's where my intention would be. So let's open up, see if the candle can print lower, respect these levels, and then continue to try to run higher, and then study once it gets up into here how the response is going to be and whether the SMT gets left in the process and then declines, or if it just rapidly reprices through, continuing the massive buy side delivery. Okay. So with that being said, I mean, that sentiment can kind of be carried over to all these other ones too. And given what I've pointed out here, that's important. I'll leave it to you guys to go in on these assets, the Dow and the S&P, and then see if you can point out things that are similar to the things that I've mentioned here, right? Think about the 3 PD arrays, think about some of the things that I always talk about, and see if you can break those down as well. Get some practice going. Okay, and we got SMT at the lows here that also led to this rally. But yeah, with that being said, let's move on to gold, and then we'll wrap it up, you guys. So gold and silver. Okay. So if we go to the weekly chart, so yeah, gold and silver are still on an absolute rampage. If we take that here, we could see that that wick is pretty strongly being respected. Didn't even get down below. Look at how it treated the 50%. Rapid movement. So I do see that we have this wick in here, so we definitely got to keep tabs on that. So that's our monthly wick. So that those monthly wick levels, drag that over. Damn, we blew well past. Damn, it almost hit. It just blew up a little bit past the 4,500. You guys remember from like a couple weeks ago, or maybe even, was it a week ago? Yeah, it was on this candle when this was forming. I called out 4,500. Right there. That's where that little check mark was. I mean, it went right to it and blew up a little bit beyond it. It's beautiful. I think I was on a Sunday too. Yeah, Sunday. Let me actually remove some of this stuff. So yeah, we got a very similar thing in here, right? With the overlap of fair value gaps. We got the stop run, so that's counterparty. Buy side, sell side. If it was going to be bearish, it would have held this. It would have held this. It wouldn't have even had to come up here because that would be a balanced price range. But because it's not holding it. That's an invalidated level unless it was to get back down below this wick here. But I think that this is going to hold up. We have a fractal low here. So because a fractal low formed, the next 1 to 2 candles after candle number 3 should be able to continue in the intended direction towards a PD array. So that simplistic way of viewing direction, which ICT teaches in the high probability scalping series on his YouTube channel. Go check that out if you haven't already. Yeah, Tony, good observation, brother. You were there when we talked about it. I think you got me to talk about gold. You know, because you kept talking about gold so much, I ended up taking my first gold trade in 4 years on a Sunday. I think in was it in December or November? I think it was in November. I have to go double check. Yeah, nothing that's not expected. Exactly. You know, we mapped out all of this from this move down here, right? We continued to trust the buy side. We called where it exactly was going to go, where exactly it was going to react. This turned out to be a market maker buy model, like I said it would. Targeted the lineup here clearly. In this level in here, I called 4,500. It went right to it. So it's just a lot of just amazing call outs left and right. And again, if you guys stick around, you guys are here long enough, you know, I prove it. You know, you don't trust me right away. Put me to the test every single week. Put me to the test. And you'll see that it's a piece of cake. Gonna have to come up with a harder test. I remember you showed us the trade. Yeah, Fritz remembers me showing the trade too. Mind you, Tony and Fritz are on YouTube alone. Like they're not even in my private group, but they're seeing this because they show up. You know, they've been able to have some pretty nice accomplishments since we first met. And I'm very, very glad that I'm able to play a role in your guys' development. And I appreciate the trust. Like I always say, it's hard to trust in this industry. So I'm grateful that I've done enough for you guys to trust what it is that we're doing here and find value in it, you know? Because I'm here to help pull you guys up. I'm not here to sell you guys a fake dream or do anything that a lot of these idiots are doing on social media to get an image. I could easily come out here and show profit this, profit that, and you know, go do all these things that everyone else is doing to get a large name, but it attracts people that I wouldn't enjoy working with. And I have to enjoy working with with people. And I want to be able to have long conversations. I want to be able to have that dialogue individually, right? Either in DMs or in my private group, or as a group here on the YouTube channel. You know, this stuff means a lot to me to be able to do this with you guys and have you guys there to go back and forth so I can hear what you guys struggle with, what you guys need help with, and then, you know, talk about anything that you guys want me to talk about as we go through this stuff to get your questions answered. You know what I mean? So yeah, but yeah, I'm glad that Tony, you and Fritz, and anyone else that's here all the time got to see that. You guys seen me call every single asset that I've mentioned today really accurate every week. For the most part, it goes to where we're trying to see it go to. And it makes sense why it goes there, right? Wherever it's headed, wherever we look at, there's a why behind it. Why is it going to go there? Why? What is important? What supports it? And what happens if it becomes invalid? What invalidates it to go to one direction like this or another? Like all those questions are answered when you guys are on this type of call that we have. So I hope that you guys all have been getting value. And if you guys are new, I hope that you stick around and give the community a chance. Give the students in the chat a chance to help you as well. To be here and help support you guys. Any of you guys that are new, I'm here to help you and support you. I know that they're more than happy to give their advice and opinions and not scared to show that they're not perfect either. So this is the type of community that that should be more common in the trading industry, right? Fritz said, "You are far, far more consistent than other streamers. They lose and WMG wins. Same sessions, same charts, same assets, same concepts, or same teacher, initial teacher, mentor, right? Well, some of the ones that are obviously outside of ICT concepts, but the ones that have the same mentor, right? The ones that started or may have been trading longer than me. I've been trading for 6 years, going on 6.5 years. Oh, that's 6.5 years now, huh? Since August 7th, 2019. Yeah, 6.5 years. Man, time is... It's been a long time, man. It's been a long time. But yeah, I mean, I noticed it too, Fritz. What, Fritz, was it you that was watching, I think, Tanya? Oh, what's up, Joseph? What's up, Joseph? Welcome, brother. Welcome. I'm not sure how long you've been on today. Hopefully you were able to be with us for a good amount of time. We talked about a lot, but if not, obviously you can go into the replay and look over all the assets that we covered today, from bonds and yields. If you've never looked at them, I explain why they're important. DXY, foreign currencies, indices, and now we're finishing off with gold and silver. And everything, like you see in the chat, some of the students saying, everything has hit targets that were well defined before the fact for literally years at this point. So you're in good hands, Joseph. Welcome. Put me to the test, like I was saying earlier, if you weren't here to catch it. And I'm sure you will be very happy you did, because you'll learn a lot more than you expect. And that's a guarantee. But yeah, welcome, Joseph. Appreciate you hopping on. And yeah, I can't remember if it was Fritz or if it was Tony who said they were watching Tanya trades. Loving appreciation to her, love and support, nothing against her. She's a great trader. But you said that you were watching us side by side. Yeah, it was you. It was you, Fritz. You posted in her chat. You were watching her side by side a couple of times and then relaying back to me, "Oh, yep, she's getting it wrong and you're getting it right." Live side by side. I'm like, sheesh. Hey, but again, no shade, you know. Tanya's pretty awesome. She's a good person. So yeah, kudos to her. She's done a lot. She provided a lot of value too. At least with the value that she has. I don't think she's been trading for that long either. At least ICT Concept, she hasn't been trading long. But she's done some great things. So kudos to her and everybody in the ICT family. We're all family as ICT traders, no matter what people want to believe. Like, oh, this person and that person, blah, blah, blah. No, we're all pretty much part of the same family. So get used to it. Like, it is what it is. But yeah, so yeah, there's that. So looking back at gold, just to close us out here. Again, this fair value gap we want to watch. Let's see if it can stay above that 50%. If it can stay above that 50%, we have these down candles, this low, and the 50% of this. And then I guess you could say the low itself, right? And then the low of the fair value gap here. That would be something that if it gets taken out, it would make me want to target the equal lows here. These are very clean equal lows. So if this doesn't hold up, which I want to see a hold up, that's the main objective. I want to see a hold up and keep going higher. But if it doesn't hold up, then we'll end up seeing, like, if the DXY keeps going higher, that may be what instigates this to potentially take a nosedive. All right. So again, we'll watch and see if this can also hold. This is a monthly wick. Ironically, this is at a 50% level. Okay. 50% level of the wick. It's also at the midpoint of the fair value gap in here. So if we drop down a little further, let's see if we can get a little bit more context. What do you guys see here? What do you think I'm going to say next? Those of you that have been with me for a while, what do you think I'm going to say next, perspective-wise? What are we going to slap on top of this, as we always do? Oh, and right here too. What happened here, and what are we expecting to happen here? Fritz said it, market maker buy model. George said it, market maker buy model. This one right here was a market maker buy model inside of the larger market maker buy model, which is inside of the retracement lower. If we can go see exactly what that was. It was simply a retracement lower, targeting the wick here, targeting some of this sell side. This low, this swing low, most recent swing low, to the most recent swing high. Go from this low to that high. It just came down to a discount, optimal trade entry, to then continue to buy, deliver the buys. We delivered buy side, sell side. That should have acted as a BPR if it was ready to go lower. It didn't. So now that we're above this level, we got to see, is it going to hold the 50%? If it does, this now becomes a balanced price range. And we'll see if we can get price to continue marching towards these equal highs, completing the market maker buy model. And again, if that buy model fails and we break down below this, like I said earlier, we have fair value gap basically holding in this regard. Since we're above the 50% here, this high to that low. All right, so high to low, 50% somewhere below this. It's like right up in here. Because we're above the 50%, if it gets back down below that while inverting these levels again, that'll fail to deliver the market maker buy model. That's a strong indication that we will then see price try to seek those equal lows I just mentioned a second ago. So that's a contingency plan. Initial main objective, invalidation level is here, but the main objective is going to be to target the market maker buy model to see if we can't get price to come up to the buy side. Okay. So yeah, with that being said, thank you guys for sticking with me this long. Today was a little bit longer call. Those of you that do watch the replay, if you know we're getting into certain things about like psychology, or maybe I'm answering a specific question that may not be related to trading, just if you're watching the replay and you want to rewatch it, you could skip past some of those things, obviously. But I think that those things are still valuable because it's specific to the students, unless we're talking about something totally not about the chart or the assets, right? But this will definitely be worth a rewatch. If you did show up late, I recommend that you do so. If you have any questions, let me know. And yeah, let me see if there's any last minute questions or anything. Thanks for yeah, you're welcome, Fritz. Appreciate you guys for hopping on and spending time with me today. Hopefully you got value. Don't forget to like the video before you forget. Subscribe to the channel if you haven't already. It's much appreciated because it helps me get in front of people, tells YouTube that we're worth listening to or at least checking out. So that does a lot for me. So I appreciate that in advance. And you're welcome, George. Let me see. That's all I traded last week. And yeah, Tony, gold. There's nothing wrong with it, bro. Trade gold futures if you can. And it's definitely a monster. It's something that I'm adding to my arsenal this year too. That's why we're going to incorporate it a little bit more because of just how it looks. I mean, we're calling gold and silver exactly the way we're calling everything else. So why not? Why not? Right? So, but yeah, with that being said, again, God bless you guys. Thank you so much for all the love and support. Don't forget to like the video, subscribe to the channel, and share with a friend if you think it could benefit anyone you know. It could be on social media or in real life. And yeah, our next live call will be on Tuesday. That'll be our live trading call. And for those of you in the private group, we'll be live tomorrow. For those of you here on YouTube, we'll be live again on Tuesday. Okay, so yeah. That being said, God bless you guys. Peace and love, and